Hey, everybody, we'll be right back, but first, a word from our sponsors. All right, options traders, listen up. I want to tell you a bit about public.com. But first, have you ever actually thought about all the fees you're paying to trade options? Aside from the regulatory fees, there are commissions, and most platforms charge per contract fees too. That's what makes today's sponsor, public.com, so interesting. Public doesn't charge commissions or pre-contract fees. And in an industry first, they offer a rebate of up to 18 cents per option contract traded. Check it out. If you trade 1,000 option contracts on Public, you'll get up to $180 in rebates. If you trade 10,000 contracts, you could earn almost $2,000. More importantly, the rebate means you can maximize your profits and minimize your losses. So to recap, no commissions, no per contract fees, and up to 18 cents on every contract traded. See why NerdWallet recently awarded Public 5 stars for options trading, and start earning up to 18 cents per contract traded only at public.com. Paid for by Public Investing. Options not suitable for all investors and carry significant risk. Full disclosures in podcast description. U.S. members only.
Hey everybody, welcome to April's first Friday on Investing Unscripted. I am Jason Hall, joined as usual by my good friend, the voice of the people. Did I get that in the right order, Jeff Santoro?
Yeah, I prefer friend first, voice of the people second.
Okay. All right. And then Jeff Santoro. Got it. And we are joined, we kind of teased a little bit about it on social media, joined by our good friend and colleague, but friend first. Did I get those in the right order, Lou Whiteman?
With Jeff, definitely.
Woof. Well played, sir. Well played. Happy Friday.
Welcome, Lou.
Happy Friday. That's nice to be here.
It's good to have you here. See, we got some comments coming in. Ken is here. Love it. Ken says the most boring investor in the world has arrived. I mean that as a compliment, Lou. Ken, I assumed you were talking about Jeff. Cena said push the button at 3:59, so we decided to wait a little longer.
Wait, hold on. I need to push back on Ken a little bit here. There are a lot of boring investors that we've had on this show. I think Lou's like top 5. I don't think he's the most boring investor. I mean, have they met Tyler Crow?
You're so
well played.
Well played. Yeah.
I will try to up my boring quotient on the. Can I tell you guys? You know this. I've been out all week. That this morning my prep for this was okay. I haven't seen anything for any headline since like last Thursday or so. What the hell's happened in the world for the last week? So there. Yeah.
Well, Lou, that's more prep than either of us do for these shows.
Yeah. Well, yeah, I know. Yeah. Sure.
Lou, but here's the thing. Here's the best thing about it. The one topic we wanted to, well, there's 2 topics really we want to talk to you about, but like the main topic we wanted to talk to you about on this show, we know that you could take a week and not look at anything and you come back and Boeing is still screwed up, right?
They're still screwed up. Yes.
That hasn't changed.
Yes. Well, so, let me say, yes. Boeing is still screwed up.
Yeah. So Jeff, what are we going to talk about today? We do have a few things lined up. What's on the agenda?
We have things on the agenda. I'm going to do the quick housekeeping before we dive into the agenda. Because I'm constantly going to encourage people to rate and review us on the podcast apps. Again, that's the most helpful thing for the show. And just follow us on all the things, YouTube, social media, the newsletter, all that stuff. That's it. End of announcements. All right, Lou, you are here. We do want to talk about Boeing. That's the top thing on our list. However, I do need to mention one more thing before we do that. There was an earthquake here in New Jersey today. And that doesn't happen very often. I actually felt it, shook my office. It was kind of crazy. And I just want to give you guys an opportunity. If you want to make a joke about New Jersey, this is your opportunity.
So we've had one earthquake for every Mets win since last fall, right?
There it is. That's the best joke.
I love it.
I can't top that.
I was kind of hoping the Mets would just go winless on the season, but they ruined that too.
Yeah. Well, they can't
even lose good.
No, they're always crushing my dreams. All right, let's move on. Let's talk Boeing. I want Lou's hot take on Boeing. Boeing, Lou, I'm going to fly on a 737 in June. I need to know if I'm going to die. Let's start there.
I've been flying a lot of Spirit lately. That's my plan for the summer. I'll say.
Those are air bosses.
Lou, before you answer that though, I do want to two things. First thing, get your questions into us, guys. We're going to have time for questions too. So those of you that are watching the live stream, find the chat button, get those questions into us so we can have more interesting things to talk about. That's it. There are really 2 things.
Go, Boeing.
You said 2.
I don't.
All right, yeah. So Boeing, where to begin? Jeff, the answer of whether you get there safely, obviously, is it depends, right? But no, look, the funny thing to me about Boeing, and it's kind of been said before, but it's so obvious the customer did this to David Calhoun, and it's so obvious who the customer is, right? Because look, any time in the last, I don't know how many years, the three of us could make the case for why Dave Calhoun should be fired, and yet he was not fired. And now in the last few weeks, they have said, okay, Dave, you know what? Maybe you're not the right guy for the job. And it happened to coincide with the JP Morgan Airlines conference where Southwest big time said, you know what? We're going to have to rethink guidance for the entire year because we can't grow because we're not going to get the airplanes that we were told we're. Uh, United came in and said, you know what? I don't know if we really want to be in business with Boeing anymore. Delta has already kind of gone over to Airbus, but they were sort of saying the same thing. And then all of a sudden, Calhoun is out. So it finally, money talks. That's the lesson. That's not much of a lesson. Uh, I think, and this is more speculative, but I think they already have their successor. It's just awkward because they are currently in negotiations to buy that person's company. And you can't really announce him as the CEO while you're doing that since they're both public companies. But I think Pat Shanahan, who is currently the CEO of Spirit Aerosystems, it was broken out of Boeing back in 2005, back when they were trying to save money by, if they take their costs to zero, they're obviously, there's no cost to buy a plane, right? That's how it works, right? So you just outsource all of the actual manufacturing. It didn't work. Shanahan's former Boeing, I know him best for almost a decade, or no, maybe not that long. He was the head of purchasing at the Pentagon. He knows Washington. He knows Boeing. He's sitting there at the target that, you know, they're trying to acquire. I think Pat Shanahan, unless something goes wrong, will be the next CEO, and it is at least a step in the right direction. But
Well,
gosh, this is going
you
to take,
wrote about that on
yeah.
your newsletter. Those that are on the live stream, I just dropped the link to that um, in the chat. If you're listening to this on the podcast, we'll put it in the show notes for you there too. Go ahead, Lou.
It's probably the last thing I wrote, and it was,
It
you know,
is. It
weeks
is.
ago. Yeah. Okay.
Lou, I have
Well,
a
whether it's the last thing you write or the last thing you wrote remains to
Yeah.
be seen.
Right.
can I ask you two questions about this, Lou? Because these are things I've been wondering and I've yet to find answers to them. So number one is, let's just say this pressure from its customers came earlier, or even if it didn't, how quickly could all these airlines actually in reality decide, you know what, done with Boeing? Like, I know Airbus is basically not the only choice, but the next logical choice. Could they even
No,
accommodate
it's the only choice.
the order
It's
books of these
really
companies if they completely bailed on Boeing? That's my first question. And my second question is, what pressure can the government put on Boeing? Because I would think if you're the White House or the FTC, or not the FTC, the FAA, you're thinking like, this can't keep happening. Like that, this is an enormous problem. So like, I'm wondering, do they have any sway here to help them get their act together?
So a few things. Of basically, they have no choice other than Boeing. But Jason, on the low end, you do have Embraer has a
oh,
really good
Embraer, yeah.
product.
Yeah.
So you
Yeah.
kind of have that. The Chinese stuff, don't even look at that for now. There's no way that's going to
Yeah,
be
Embraer is
in
the
the
only other
Western
one I was
Hemisphere.
thinking of.
Yeah,
But
yeah, and
they don't make a like a double wide, do they? They don't make anything.
no. But most of the issue here is this single aisle 737 versus the
Yeah.
A320 Neo. On the low end, look, what the plane that Southwest really wants, the 737-7, which isn't certified yet, and is probably not going to get certified because of, if Jeff gets to your question in a second. But you could argue that Embraer could make a version that sort of slots in for that. But no, there's kind of a gap between the two. But okay, so as far as the customer thing, yeah, the issue is that there is not enough extra demand right now that would justify the expense of Airbus building a whole new supply chain and a whole new um, facilities. So they are kind of capped out on their production. So there's only so much you can do. But remember, a lot of these orders are staggered over a decade. Okay. And in a lot of times, positions can be moved. A lot of them are owned by companies, the slots are owned by companies like AirCap, and they can sort of go to the highest bidder. So there is some flexibility if you want to put the heat on Boeing, but there isn't an obvious, all right, I'll just run down to Walmart and get, Tylenol instead of Advil or something like that. You can't do that. but there's subtle pressure. And especially this pressure has been building. It wasn't just this week. We've seen some really amazing big orders through this. We always talk about list price. They never pay list price. I would bet you on a lot of these, like that big United order, I bet you they paid pennies on the dollar because that was there's blood in the water. Let's capitalize on this. Step two is, oh my gosh, it's affecting my operations. Now I'm really mad, not just pretending to be mad to get a good deal. So that's kind of the shift. As far as what the government can do, look, the government is very, very cautious about going after individuals when it's not a criminal. Okay. Calhoun Calhoun's crime is he's not fixing things. His crime is, we've had Boeing executives go to jail on other issues when they did break the law. Um, the government has all of the ability to clog the works and force change in a subtle way, maybe even off the record to the board. They say, "Are you sure Dave Calhoun's your guy?" Something like that. But I don't think you're going to see something overt from an administration saying Boeing won't heal if these guys are there. So I think there's limits. I think the FAA, it's pretty extraordinary what they're doing. They are saying you can't you you have to call us before you decide how many planes you're going to build. Or if you try and up that. I mean, that they are kind of going to the limit that they can. And I think that's to the customer speaking up and saying, you got to get involved. I don't know. Is that everything?
Yeah, no, I was about to say something and I actually muted myself instead of unmuting myself. No, because I guess the reason I asked the question about like how quickly could they switch, and then we have some questions, Jason, we should probably get to.
Yeah.
I know this is a worst case scenario. I don't want it to happen, but I was trying to run through this scenario in my head. Like, what if it was determined by the government that an entire line of Boeing airplanes just can't fly anymore? Like they grounded the 737 MAX for 2 years. Um, what if some extraordinary thing, more than just that fleet was grounded? That's kind of what I was thinking in terms of like, well, what do you do? Like that's just a catastrophic thing for the industry because it's not like you can go build X amount of, dozens more planes from another company immediately. So that was the genesis of that first question.
So we are far, far from this. And I want to like big red light say that, so we
Yeah.
don't like necessarily say we're going there. But that's the situation we get into the N word, nationalization. I think if things were that bad, you would see the plants continue to operate under some different way, and it's hard to say what would that look like. Maybe it would look like the GM bailout or something like that, some sort of public-private co that is almost, it hurts to think about. The one thing to note too, and it doesn't, if you were, if there had happened to have been someone sitting in that seat and that Alaskan Airlines seat that got popped out, it wouldn't really been much solace to them. But there's a huge difference between what went on with the MAX to get the grounding and what we've seen since. With the
Right.
grounding, it was an engineering design flaw. They were
It was
trying to
something that directly
compensate.
was they figured out pretty
Yes.
quickly. It affected
Well,
a
well, well
whole lot of
but
airplanes. It
but also,
affected a
yeah,
whole lot of airplanes.
it was a blueprint problem. They
Right.
were trying to compensate for the bigger engines and they just screwed up. They didn't think it through. And so it was a fault in the design. And there's no way to put a band-aid. You have to go back and fix that. Everything else, um, everything else since has been more of an operational error
Right.
where it is seriously, you're not putting the bolts where you have to put the bolts. It's a much different fix. It's a much different problem. It still is the same potentially catastrophic results, but it's a very different way. You're not going to ground a whole fleet indefinitely because of an assembly error. You're going to ground each plane until it's checked.
Right. You could just
And
check the bolts and then move
yeah,
on kind of a thing.
yeah.
Yeah.
Right.
And so as long as we're in that world where, and knock on wood, we are far enough along on the Max that, it's just like some of these products, you put software out in the world to find out where the bugs are. It's real business when it's an airplane, but every new airplane model comes with the unknown. And we have now getting the flying hours where knock on wood, we're past that risk with the 737 Max.
Right. Because I mean, the Alaska plane, that was a plane that had been repaired. It had gone back to
Yeah.
Spirit and then come back. So
Yeah,
it wasn't fresh off the assembly line. And again, it was a process thing, not an engineering thing. I think that's the point, right?
that's the
Yeah.
thing. It was probably
Yeah.
it was
Right.
relatively new, but it was a process thing.
Hey, everybody, we'll be right back, but first, a word from our sponsors. FinChat.io is the complete stock research platform for fundamental investors. They have all the standard financial data on more than 100,000 stocks globally. But beyond that, they have company specific segment and KPI data on more than 1,500 stocks. Want to see Netflix's average revenue per member over the past 10 years? FinChat's got it. Do you like to track YouTube's advertising? They've got that too. Want to see how much of Celsius's revenue comes from Costco? You guessed it, they've got it. The breadth of FinChat's segment and KPI data is truly one of a kind. I use FinChat all the time and I love it, especially for checking out the KPIs of all the stocks in my portfolio. To get 15% off any paid plan, go to finchat.io/unscripted. That's finchat.io/unscripted to get 15% off any paid plan today. The link will be in the show notes.
So we've got some questions that have come in. I'm going to mix them up a little bit. Ken, I'm going to take Ken's question first, and then Teo, we'll go to yours. But before we do that, I have an observation too that I think is important. It feels to me like we've already seen kind of where we are, because you talk about the Patrick, the guy this runs Spirit Aero Systems now,
Yeah, Pat
whatever.
Shanahan. Yeah,
Yeah, Pat Shanahan. You know that. So, but it feels like we've seen the system work, right? We've seen the regulatory impacts. We've seen the impact of the customers. We've seen the impact on the market, right? All of those things. And it feels like it is starting to turn Boeing in the right direction. So, well, let me rephrase that. It's turning the people, right? The leadership maybe into the right direction. Whether Boeing gets pulled in that direction, we're going to find out. I really like Ken's question here because, Lou, this is to a stock that you beat the drum on a ton over the years that you're a big fan of, AerCap. How does AerCap benefit from the Boeing issues? How does AerCap not benefit? I'm guessing, and you can answer, this is not good for AerCap because it means fewer airplanes are being sold, which means less lease revenue for AerCap. But I guess it's probably benefiting them with some of their older planes that they're maybe making a
yeah,
little more money on the other side of.
yeah. So do we assume everyone knows what AerCap is? AerCap is basically the middleman. They buy planes on behalf of a customer and then lease them to the customer. So
Can I
the
call them
debt.
the realty income for the airline industry?
Kinda, yeah, yeah, yeah. So in other words, the old model was the airlines had all of this debt on their balance sheet. This way, AerCap very rarely buys a plane without it already having a destination, already having a lease. And some of these newer ones they do because there's just so much value. But yeah, they're kind of the middleman. They do the financing in return for long-term leases. Hey, so Jason, I don't disagree with anything you say. I think for the most part it
You don't
benefits
disagree with
because
anything I say so far?
well, on that small point, I
Okay.
disagree with a lot. I more disagree with your decisions than what you say, but that's a separate podcast. Okay.
You sound like my
Um,
wife.
yeah, yeah, we've talked. Trust me. All right, I got a spit take. I can leave now, right, Jeff?
Yeah,
All
no, that
right,
was great. And we do
all
the
right.
side by side shot for these videos too, so everyone
Everybody
will
saw
have
that.
seen that.
That's good. That's good. Um, yeah. See, now I'm looking for. It. So AirCap. I think they more benefit, but it's almost it's sort of I say nothing burger, but I don't think it moves the needle significantly either way. I do think that if you look at the size of AerCap's fleet, the idea that planes are slightly more scarce and slightly harder to get is a net positive for a company that owns and sources planes. So there is some advantage to Boeing not being able to produce at the rate they want and airlines relying on the existing inventory.
So
You
they
are
may have some
correct.
fully depreciated inventory that they may have been thinking they were gonna retire that they're gonna continue to lease.
Yeah, yeah, and truthfully, one of the great things about AerCap is that there is so much demand out there. That was probably the case anyway. That's why I'm not sure it's really a huge positive. I mean, this industry globally is growing at 2 to 3% a year for the next probably 20 years as the emerging global middle market. Forget about a plane that's 15 years old in the United States. Southwest may dump it, but there are airlines all over Asia, Africa, the Middle East that gladly take it. So these things have a lot longer lives than we realize. it is true that to some extent it stunts growth if you can't take new inventory. But remember, you're also delaying the taking on new debt for those. So you're sort of a washout there. It's not like you have 10 billion in new debt that's just sitting there with interest payments and you're not getting lease revenue coming in. I think this is largely a non-event. What it does do is AirCap is already sort of the master of the universe here because they control so much inventory. Airlines have to go to AirCap if they want to grow to some extent. That's even more true in a world where the aerospace companies can't source new material. But look, it in a different market where there wasn't so much demand, it could have a bigger impact either way on AirCap. I think it's largely business as usual monitoring. Maybe things don't jump the way they would have otherwise, but it's certainly not a sky is falling, and they're not really making rain off this either.
So, Teo has a question in the chat about boring stocks, um, which is carrying on the theme from how we started today. And he says, Boeing is sure too boring for me. Do you guys think if it's bad, if investing is also kind of a hobby, that sure, you obviously want returns that fulfill your objective, but at the same time, it should be kind of fun? I mean, I'd happily buy AbbVie, Realty Income, and other boring stocks, just maybe not Boeing. I'm a big believer in owning things that you're interested in. And I think you can find boring stocks you're interested in. Um, but I don't know. Personally, I don't have any problem kind of excluding things that your eyes glaze over when you think about them, because then you're not going to be interested in following them and keeping track of things. But curious what you guys think too.
Lou?
This to me is the benefit of mutual fund. I mean, I can tell you how I answer this question for me, and I'm pulling up the numbers right now. I can give you updated based on today. About 66% of my family's equity exposure is through mutual funds and the government thrift savings plan, which is basically me. That to me is the bore. That's going to get us to the finish line. And that other 33%, you see, boring is in the eyes of the beholder. To me, boring is I don't want to, I want to go away for a week and not think about it and not worry about what happened. That to me is boring. But the companies I own, I mostly own because I'm interested in. Because I'm interested in what they do, because I know what they do. And absolutely, Jeff, if you're going to buy individual stocks, which by the way, I don't think you have to. I think it should be I want to. And
Yeah.
most of the reason
Yeah.
you want to, it's great if it's I want lottery tickets. If that's your motivation is I'm just going to buy a lot of things that I think go to the moon. I don't care about any of them, but I just am hoping that one of these lottery tickets pays off. That's fine. But for me, a better reason to stay long term with individual stocks is I'm interested in it. It's something I like to do. And like I say, with the caveat that I personally love the insurance policies, most of my money moves along with the market over time. And that so far through history, that's worked out all right.
So, what is a stock that you each own that you
Is
are
Jeff
interested in,
muted
but
or
you
am I?
think most people would be bored by?
I've lost Jeff.
Oh, did you lose me, Jason?
No.
Oh,
I heard him.
all right.
Lou?
We lost Lou then.
I think we lost Lou. Lou, we still have you.
Yeah, I
If you
just got you
don't,
back. I don't know what happened.
you were so the question, I'll answer the question, Lou, and then I think maybe that'll tell you what the question is. Thinking about the idea of boring stocks that I'm interested in, a stock that I own that I think is interesting, but most people would find boring. Jeff, which bank that I own should I talk about?
I knew you were going to go with a bank. Oh, I hate banks. All right, go
Well,
ahead.
I did you do hate banks. There's a word you use to describe banks that I can't use because we try to be family friendly here. But so I did a video with Tyler. I think the video is already live on our YouTube page. Bank of NT Butterfield and Son.
Oh, this is a bank I know a little bit about, and it is boring.
Beautiful.
I mean, it is beautiful. It is. It's. The thing is, NT Butterfield it's the oldest bank. I think their headquarters is in Bermuda.
Yeah.
Bermuda.
Yep.
They've got branches in the Cayman Islands and Jersey and Guernsey, the Channel Islands, English Channel. I mean, basically, they help rich people deal with banky kind of stuff. That's an industry that used to help rich people hide money. Used to.
Maybe still a little.
I'm
Maybe
going to
still a
keep
little.
saying that. I cannot confirm nor deny that. I but it yields 5%. It's a very high quality business, very profitable. They have a great fees-based income. Um, and the thing about it, like, here's how I think about this. The question, to tie Teo's question into this, is I think better than finding entertaining stocks or fun stocks is finding stocks that maybe scratch like an intellectual curiosity itch that you have, right? Help you learn, help you engage you in that way. Because like a lot of the stuff that's exciting or fun or seems really futury is run by people that are just trying to screw you out of your money. They're just trying to hand you their bags, right? Think about companies like Plug Power, ChargePoint. Pick an EV company over the past 5 years. Now, I'm throwing a lot of good people in with bad actors there too, because there are a lot of people that have great ideas and wonderful visions that absolutely fail and they take your money down with them. So that's the problem I have with excitement, is because we fall in love with an idea and forget about the business execution and the degree of difficulty of doing these things. Like Tesla, look at what Tesla has done. Sure, you can say, well, look at what it's done over the past 3 years. It's destroyed a lot of value. And that's true. But this became one of the biggest auto manufacturers in the world from nothing. I mean, just that by itself for a US company to do just that, not even putting the fact that they're selling electric cars on top of it, not even putting the fact that they've generated massive returns for investors over the truly long term. It's incredible. Instead of trying to find the next Tesla, people should have immediately gone to other industries, right? Because it shows how damn hard it is and nobody else is going to do the same thing in the same industry that Elon Musk just did it in. So anyway, off the soapbox. Lou,
What? I already answered. Oh,
what's yours?
boring?
What's your boring stock that
Something you think
think's
other people think is
Do we
boring
want
that you
to,
love.
Jason? I told you I wanted to go there anyway.
Oh, that's true. That's true.
XPO, look
We
at
can
that.
talk
He
about
just knew
XPO.
it. Folks, don't
XPO
ever think that
Logistics.
there isn't show planning. Okay. Uh, so
Look at that professional segue.
Yeah, XPO. I mean, I would say XPO is the boring part of the old XPO. They're three different companies now. I mean, the other two are, and Jeff, I'm saying this just to get under your skin. The other two are the sexy businesses and transport. XPO is just an LTL trucker, but pull up that chart. Look at that chart over last year for XPO, and it is something to behold. And it is a less than truckload trucker. That's all they do now. What they do is they do it increasingly very well. There's a favorite of Motley Fool, the Old Dominion freight lines that we've been talking about for years. Kind of to kind of go all the way back and Cena. Yeah, we'll get to GXO in a second, baby. Don't you worry. Um, to kind of really make it look like we planned this. Let's talk airlines for a second. There was a company called Southwest Airlines. You might have heard of it, who for years kicked everyone's fanny because everyone else is dumb. All right. That is how Southwest became Southwest, because United was run by morons. Delta was run by morons. A lot of airlines that you kids in the audience have never even heard of, like Eastern and Brandon, TWA, they were run by such morons you've never even heard of them. And Southwest just came in as the only sober guy in the party for a whole industry and won. That's Old Dominion, basically. Okay.
For like 20 years, and Southwest did that for like 20 years.
Yeah, for more than 20 years. Old Dominion's
was remarkable
for longer. Here's what I'll tell you, though. Southwest over the last decade or so, since beginning with Delta, they got religion and realized, wait, maybe we should start pricing seats to actually turn a profit instead of just to say we have the most seats. And look what has happened to Southwest now. It's still a well-run company, but it's the proverbial low-hanging fruit of all of my competitors are morons is gone. That's happening in trucking right now. And I mean that as both and I'm talking my book here, so please, everybody out there, remember that. But Old Dominion's sitting there very proud of themselves because the rest of the world is run by morons, and there are some really good companies out there that aren't run by morons anymore. XPO, in fact, grabbed Old Dominion's longtime chief operating officer and put him in charge. And all of a sudden their efficiency is up by 300-400 basis points. And they're making money in a time when nobody wants to be a trucker. I worry about Old Dominion as an investment kind of because of that. Even if XPO doesn't win, I think Old Dominion strikes me the way Southwest did before, is they will continue to run a fine company, but either their premium will erode or others will come up as sort of the competitive playing field. Um, you get kind of it's out, and I'll give you a real like concrete example of this. A company called Yellow Roadway, a trucker who's just been dysfunctional for decades. They ceased to exist last
Mhm.
year. Okay. And this was, we talked about being the only sober guy in the party. Yellow Roadway was the one with his shirt off doing cannonballs off the second floor into the pool when the pool wasn't filled. Okay. That was their role in this industry. All right. So everybody got better that Yellow Roadway isn't outpricing things now because they would literally say, why do we charge for trucking? We could give it away for free. This was, they were just the, the class moron. Old Dominion, all these assets go on the market. XPO bought some. A lot of the other companies out there bought assets. Old Dominion didn't bid because that's not what Old Dominion does. Old Dominion has a culture, and we don't. We grow organically. I'm telling you from a very good source that some of these companies that bought, who trade at PEs of in the 20s, bought those assets for 3, 4, 5x earnings. Okay. So just putting those assets onto your
Right.
system, you're buying it at 4x, and then your stock trades at 20x if your earnings come in. I think Old Dominion's sort of like the old guard sitting there, and my boring little trucking company, which I've just made the case for why I don't think it's boring. There are a lot of opportunities in a boring old industry like trucking. Do the 10-year on XPO and see how that worked out for people, right? It's not boring if you invested in 2050.
Yeah. Oh, it's been very good. On behalf of all the sober management teams out there, this episode of Investing Unscripted brought to you by Old Brown Dog Ale. That's my beer of choice. I would love to see in the comments what folks are enjoying on this
Coffee.
fabulous Friday.
All right. So Lou, I have a less
Coffee
than
for
truckload question, less than truckload trucking question for you.
Yeah.
So
So
you're just asking half a question here, Jeff? Is that
yes,
what you're
just
doing?
half. So I've looked at and been interested in the XOs, the GXO, the XPO, all of the Brad Jacobs stuff. I've not bought any of them. However, I've owned Old Dominion for several years now. And what's interesting to me is I've seen a little bit of the weakness in their business just by following their, quarterly reports. But the valuation for Old Dominion does not seem to have come down hardly at all in the 4+ years that I've owned it, no matter what the business does. It either is super expensive or just very expensive. So I'm curious, is the market just not catching on to what you think you've caught on to here? Or why has, they've been struggling comparatively the last couple quarters. Why hasn't the stock
So I would
lost
say
more
it
value?
again, I'm looking at the world through filtered glasses. So please, remember that we said, but I would say for one thing, if they aren't actually screwing up, why should their valuation change? It more to me is an argument for why to own a company that may not be on their level yet, but is approaching their level. And so therefore, regardless of growth, should see hopefully that multiple go up. I think that's more the story here. Old Dominion isn't doing anything wrong. I do wonder if, I mean, there is some bulletproof where you have it until you don't, right? And there's a lot of stocks we can talk to about that. I mean, things don't, the market isn't efficient. Okay. The market is going to price it after the fact. I think most of the weakness you've seen in Old Dominion is weakness throughout the industry. And you're going to see it into this current quarter. We had some crazy pandemic supply chain times where things were gangbusters, but over the last year or so, a lot of the big customers of this industry have said, I'm not sure about the future of the economy. I'm not sure the future of the consumer, interest rates, inflation, all of that. I'm not going to order as much stuff. It's just been a tough environment for shipping companies. And even on the FedEx side, why did FedEx really go gangbusters with this last quarter? Revenue was flat to down. And they said revenue will be flat to down again. It was on the cost side. So everything going on has been on the cost side. That's why, to be honest, just again, to talk my book, XPO showed almost double-digit growth year over year in their last quarter. That to me tells me they're actually winning share, which excites me. But for the most part, I don't think you've seen Old Dominion underperform the overall market for their services. What I think we're seeing is kind of the playing field even where others are catching up with them, and that takes a lot longer to play. It might play out in stock appreciation more than it does the stock craters. So, and
Yeah,
let me
no, that
say
makes
this,
sense.
for
That
my
makes sense.
money, of the three of those, the Brad Jacob universe, GXO is still the best stock to buy. XPO is a trucker. I like the trucker. I'd like having it in my portfolio. I'm not going to sell it, but it's not going to have in a lot of years the last year it's had. RXO is very speculative and very much in a difficult industry. But GXO, I've been saying this for a while now, and they are right now. Look, this is a terrible stock. This is a stock I have in you guys' portfolio, and it has been a terrible performer. We can look at it because right now they are in an environment with, just like what we said, with demand isn't great, where they are just building this thing. But they are going to be the company. Excuse me. They are going to be the company that is the back end of e-commerce growth. And if you believe that e-commerce is going to continue to grow, but like me, you're kind of skeptical about how much, outsized growth the big e-commerce companies can get. Because look, there are a lot of people already into the e-commerce companies, right? I see these back office, we will control your returns, we will control your shipping, we will take over your warehouse. We will be experts at something that you don't want to learn how to be experts at. Even Apple, the company that loves to do everything in the house, Apple built $1 million facility, did the groundbreaking, threw the keys at GXO and said, this is your problem. Okay. And it's still got an Apple logo
Yeah.
on the front of it. Every employee inside is GXO. And that's Apple saying, this is a headache we don't want. They are, to me, a bet on the future of e-commerce at a multiple prior that you just can't get from the actual retailers anymore. And there's a lot more competition of retailers. A lot can go wrong.
Cena beat you to the point on
Well,
that one,
Cena's
by the way.
smarter
Beat you
than
to the punch on that about 5 minutes ago. He said, let's
be
yeah,
honest.
okay. Let's not forget GXO, the unboring part. Box robots are sexy. I'm just teasing, Cena. Yes. Very, very
So,
smart.
continuing on the theme of belying the fact that we don't plan the show, Lou, you mentioned you having that stock in the portfolio contest this year. One of the things I wanted your thoughts on, I don't know how much you've followed how your portfolio is doing, but this episode that we're recording right now should drop sometime this weekend, if not very early next week. But the episode that comes out on Wednesday of next week is the Q1 review, where we go through the whole contest and talk about everything. But because you did not win, nor are you as bad as Jason, Lou, your portfolio did not come up in the
That's
conversation.
better off.
So, I do, I do, I do want to give you an opportunity to chime in here. And just real quick for the listeners, so Lou's worst stock in the portfolio is Core Card, which I want you to talk about because that's one I've heard of, but I'm not super familiar with. And his best performer is RTX Corp, which is another one I don't know.
You do. You just don't recognize
Go in
it.
any
Yeah, you do.
direction
You
you
know by
want.
a different name.
Okay.
All right.
Yeah.
So enlighten me, Mr. Whiteman. Go in any direction you'd like. Thinking about
Before
your
we do,
portfolio
I
and
have
our
the
contest.
attention span of a squirrel. So good. I need the name of your bar. I'm actually in Potomac, Maryland, quite a lot. I'm curious where you went to high school, and we need the name of that bar in Potomac, Maryland. So hold on. Just before that scrolls off my page, okay? That
Yeah, he'll
gotta
put
get
that
the
in the
important
chat
stuff
while we're
out.
talking.
Or if
and
you
then,
don't want Jason to know, good, just figure out how to contact me elsewhere, okay? Because I get that too. Okay, so I think I did a write-up sort of trying to justify my picks, which, it probably has aged about as well as my picks. But of course,
But people should check out Lou's newsletter, which we have not directly plugged yet. I know we referenced
yes,
it earlier. Fits and Starts. Find that on
which
Beehive
occasionally
and
gets
check it
published.
out.
Yeah. But
Well, there
that's
are
right.
the fits and
That's
then
right.
there are the
It's a great
starts.
December song too. So Google that, even if you don't Google the newsletter. But uh, I think I basically wrote, core card. I should have probably picked all core cards because that is really the casino pick. And the one thing about these 1 year contests is you just kind of want to catch lightning in a bottle. Jason, tell me how that's working out for you though, right? Because
Yes.
it doesn't always.
Yes.
Core Card
Yes.
is a fascinating little company. Have you guys ever heard of Peachtree Software, the accounting software? It is Peachtree Software because
Yeah.
it was
Yep. I have. Lou,
Yeah.
Jeff's worked in schools his entire adult life. He
Yeah,
hasn't heard of
that's right.
anything that's in the real world.
No, I don't.
Yes,
What is a
exactly.
real world?
Peachtree
There you
is an
go.
accounting
There you
so it
go.
was sort of the original accounting software, and it was pieced together by a bunch of really smart engineers from Georgia Tech, which hence the name. The people who started that when they sold it, they started a tech incubator, which they eventually took public, and they sold a couple of other things to other people. There's stuff in a lot of the credit products. It's why all the credit scoring companies are based in Atlanta. But the one little piece they kept, and they eventually just, as they aged, decided to make it their company. This is CoreCard. They make a particular tiny piece of financial services software. And without getting too in the weeds, think about it. Say you're a corporate fuel card issuer, okay? And you, in effect, have 1,000 cards out there, and you get 1,000 single bills coming from each and every one of your drivers coming in, and you need to organize that and make sure and you want to track that. They make the software that makes that possible. Or say you have payday loans, and you might have 3 or 4 relationships with one bank, or maybe a dozen relationships. The bank needs to figure out when you make a payment, which of those loans is that credited towards? Kind of managing multiple products for what that is all they do. Okay. And it is a really, really hard software to replicate. One small problem they have, though, more than half of their revenue comes from one customer. That customer is Goldman Sachs. Okay. That looked pretty good a couple of years ago when Marcus was a thing, when the Apple Card was a thing. Um,
Blowing up now.
Over the last year or so, it has become clear that that isn't working out the way they hoped, and they have a huge single customer risk.
Yeah, and for those that don't know, Goldman is basically exiting
Mhm.
commercial banking.
Yep.
The Apple Card that's with them is going to a new bank. They're closing I mean, they're trying to find a
Yeah,
buyer for
or something
Marcus. Is
like
that what
that.
they're?
Yeah,
Yeah, yeah. It's
I think it's also they were planning and had announced more things that they
right,
just decided not to do.
right,
no, because they've
right.
lost a ton of
So
money.
now here's the
Yeah.
good news. I mean, they have.
Yeah.
I mean, the core card is kind of embarrassing that for the first time in their existence, they went out and hired a sales team because they realized the single customer risk. So they are slowly, and there's a lot more intricacies in what they're trying to do, but it's basically around this one core functionality. A lot of what they do is so complicated that a lot of the revenue they get is consulting, where they have to send a team to you to help run this software. It's so complicated. It's pretty low now. It was pretty low. I picked the stocks I picked largely based on what I thought they could do in 1 year. They weren't necessarily what I would buy if you gave me 10 years. But for both that one, the idea was it could go to zero. It would not shock me if they're at zero by December. But if they can get the year, you know what, together, and if they can diversify, even show any signs of diversifying their customer base, it could double. It could get back to where it was. Because even if investors, those of us
Right.
who follow it, who are intrigued by it, who, maybe don't want to always be boring, but or realize, look, it's not gonna send me to the poorhouse. But we're watching. If there's any sign that it recovers, it can go straight up. But it could also probably more likely be a zero. So there's that. And so far that's been a problem. RTX, Jeff, that is the old Raytheon, which merged with United Technologies Aerospace.
Oh, okay.
They originally went to Raytheon Technologies and decided that that was too sexy, so they went to RTX, right? They had a little problem with their engines last year. You might recall the Pratt and Whitney engine, right?
Pratt and Whitney's their
They
engine
were
division, right?
using
Yeah.
a faux metal, which it turns out they didn't mix it right all the time, so the engines could just turn to dust in midair, right? Not a great look. So far,
Hmm.
so
That
far
seems less
hasn't
than
happened.
ideal for an engine on
Right.
an airplane.
Suboptimal is
But
the engineering.
unlike with
Suboptimal,
Boeing,
yes.
when you just had to like take a plane out of service for a day, pop the cabin, make sure the bolts are in, and then put it back, to take these planes out of service, to check the engines, to make any retrofits you have to, can take months. And they owe money to all of their customers as that happens. They are paying their customers to take the planes out of service to check, not to mention the fix. It's a $6 billion problem for them. Okay. And when that happened last summer, the stock crashed. RTX isn't my favorite aerospace company. But so far to date, as of December, whatever, whenever I made the pick, and since then, they have handled this the way Boeing should have handled it. And they have handled it with 5 stars. And that is a bet that as the market realizes this isn't Boeing, and it is a one-off thing that was a very, very bad screw up, but which they are handling and they still have the trust of their customers, the stock would return to where it was before any of this happened. And so far, so good on there. There's still some way to go, but so that one worked. CoreCard hasn't.
Hey, everybody, we'll be right back, but first, a word from our sponsors. Earlier in the show, you heard us talk about investing platform public.com. That's where you can trade options with no commissions or per contract fees. And you get a rebate of up to 18 cents per contract traded. NerdWallet recently gave Public 5 out of 5 stars for options trading. If you want to see why, go to public.com and start getting a rebate of up to 18 cents per contract traded. Paid for by Public Investing. Options not suitable for all investors and carry significant risk. Full disclosures in podcast description. U.S. members only. So it's interesting you laid out both in the post that you referenced, but also just now sort of like your thought process in picking these particular stocks for this 1-year contest. And it got me thinking about what lessons do you think can be learned and also should not be learned in playing a fun 1-year contest like this?
So less so now, but I do enjoy a good cyclical stock. And I do enjoy the get in here and get out there. Just kind of because I'm bored. I wouldn't want to put the net worth on it, but I do think there is a way to do this. I joked about before, I don't believe in efficient markets. I don't believe it's all priced in. I think a lot of it is whatever we happen to be feeling in a particular moment, regardless of what our brain tells us. So I do think there is a way to make money doing this. And I do think that those are two pretty good examples. I mean, some of the others I picked, it was more what I think rates are going to do and what it's going to do to income. TFS Financial is a perfect example. Um, thank you. Thank you for making it, dividends included when you do the quarter thing, because that certainly helps there with the 8% yield. But also that is a stock that's either going to end up bankrupt or is criminally undervalued right now. But that's not one I'm necessarily want to own for 30 years, even if it happens not to go bankrupt. There is a way to invest like this, but there's also, if you want to invest long-term, and even if you don't get on these things, it is good for your mindset to understand that these things go in cycles and go in waves. And so I think there's actually, as much as I gave you flack for this, and as much as I don't expect to do well, because I hate trying to figure all this stuff out, I do think there's value in looking at an Autodesk and saying, like, look, part of what's going on there is they're just changing the way they're billing customers. And that's all going to even out as the year goes on. Well, let's see what the stock does. And so far, it's done nothing for me. So I can't say, but there is, if nothing else, if you're going to play this game and get into individual stocks, even if you're not thinking year to year, I do think it's important to understand the way the market vibes so you don't freak when it does. Does that make sense?
It does. And because I feel like anytime you, forgetting a 1-year contest, I do think that some level of what's going to happen in the short term versus the long term plays into every single decision, like what you buy, when you buy it, how much you put into it. Um, I think we'd be lying to ourselves if we pretended we weren't sometimes trying to catch a short-term tailwind.
Yeah.
Um, even if it is a company you believe in over the long term, right? Like you can hold both of those things. I think can be
Right.
true. So,
Oh, look, there's a lot of companies I
We-
love that I wouldn't consider selling, that I wouldn't add to right now because of my perception of where they are in their cycle.
Right.
So
Right.
even there, um,
yeah, the whole
That's
top
really
half of my
important.
portfolio is in that category right now
Yeah.
of stocks that I like, I want to hold, but they've been on these incredible runs, and I'm just enjoying it, and I'll buy them when they crash, kind of a thing.
Yeah. If, I mean, that's
Yeah,
the
I know
thing,
if
right?
I know, and that this is we don't have to get on that tangent, but then there's the whole Nvidia is a perfect example. I thought it was done going up 6 months ago and stopped buying, I would have been up another 80, 90, 100% if I had bought back then. So who knows?
Let's spend a few minutes in the chat. We've got some good questions and some fun comments coming in. So we had Good jumped
yeah.
in, Lou, as you mentioned, and Good. I want to say this. So Potomac, Maryland. If you're in Potomac, Maryland, this is exciting for everybody listening to our podcast. So go into Old Anglers Inn ask for Dave. Just ask for Dave at the bar, and he's going to give you a free beer. Everybody listening to this, I'm kidding. That's all a lie. Lou, do go to the Old Anglers Inn though, because Justin said he will buy you the first
amazing
beer.
location.
If you're in Potomac, Maryland, you should go. You should go to Old Anglers Inn, all of you, and buy a beer though. But only Lou gets a free
right
one.
on Grateful. I'm impressed. I went to high school not too far from there, Justin. So yeah, I don't know when I'm going to be up there again, but I'm going to find a time.
And I just want to call Justin out a little bit. You can still leave us a podcast review, even if you only watch on YouTube. I think that's allowed. So go ahead and
it's okay.
Go ahead and click those stars, friend.
We'll allow that. Teo, I love your comment
for reviews here.
I love Teo's comment here, Jeff. I said, now I can't remember the engineering term that I use. Suboptimal. Teo prefers George Carlin's minimally exceptional. That's very, very good.
Good one.
Very good. Let's move a little further up the questions, because I thought this was a good one. I'm trying to find it now.
It got lost in all the comments about drinks.
Yeah, exactly. Sorry about doing that to the comments, everybody. But so Ryan mentioned this earlier, about halfway through the show. What defines boring or unsexy? And I think this is so good. And he goes on to say anything non-tech. And then says, by that definition, NVR, Trex, EPR would probably be my most boring. I love this because, man, that is a very individual question, right, Jeff?
Well, I liked how Lou phrased it. Like, he thinks of boring as being a stock you don't have to worry about, which is not, I agree that is a type of stock, but I've never viewed, that's a different way of boring than what I'm thinking about right now. I'm thinking about, just a boring business that just isn't super interesting. I never got to answer the question. I think for me, the ones that I own that I think a lot of other people would think
Lou,
are
so I've
boring.
got a question for you. I'm kidding. Go ahead, Jeff.
Well, insurance is not very exciting. So I think anyone who owns any insurance company, you could probably put that in a pile of like boring companies. So like I own Berkshire Hathaway, which I know is not just an insurance company, but that's a big part of the business. I own Kinsale Capital. That's an insurance company. At least it's a little bit more exciting type of insurance. Like they're insuring like axe throwing establishments
Jeff,
and things
so
like that.
What's the difference between Kinsale Capital and Berkshire Hathaway over the past 7 years?
I'm going to say Kinsale Capital has outperformed Berkshire Hathaway over the last 7 years.
Kinsale Capital has outperformed the market. I mean,
yeah. But here's another like boring one. All right, here's one I don't own, but I think is super interesting. Although I mentioned it to someone once and their eyes almost glazed over. Copart, the company that takes
salvage cars
and resells them and stuff. Like I think that's fascinating because it's just one of those things that's always happening. People are always totaling cars, unfortunately.
Idiots are wrecking cars.
I think to most people that's probably super duper boring. But so I guess like you said, Lou, boring is in the eyes of the beholder.
Right. That's what I tell.
Yeah, I think.
No.
Go ahead, Lou.
Yeah,
probably best that I interrupted you. I'm kind of getting that impression. Yeah.
All right. As we transition here, I have something that I'm going to share with the viewers here. Sorry for the people on the podcast, but I developed a new currency. I'm calling this Jason coin or something.
You didn't even think up a good name?
No, I didn't. It's just a $20 bill with Jason's stoned-looking face superimposed on it that I made, and I just wanted to share it because I think if you came here live or are watching on YouTube, you deserve a little treat.
You earned this. This, people.
We had a little lull in the conversation.
You earned this.
So there it is.
I like to think of that as a $20 bill.
Jeffrey.
Ooh. That is really good, so right?
Don't encourage.
My last name's Hall. So it's a holler bill? 20 holler?
Yeah,
bill?
we get it. All right, moving on.
All right,
we have like 8 minutes here. I have a couple questions for the two of you that I think would be a fun thing to kind of wrap up here, and we can pull in some more stocks to the conversation. So we're out of earnings season. We are, believe it or not, only like a week or 10 days away from the next one. But I'm curious, as you guys watched the companies you're interested in and that you own, as they all reported their mostly Q4 earnings over the last couple months, what's a company that either concerned you or got you excited based on what you heard about in their earnings report?
All right, I'll give you a few.
We'll go first.
Concern first. Two that I own that just, but Endava and DocuSign. I would put both on that list, kind of for different reasons. Endava's
Endava's
just
on my
having a
list
real
too, Lou.
tough time. And you compare them to Accenture, and
Yeah.
I get the scale is crazy, but both of them are, in theory, going through the same thing, where it's just a tough time for consultants for some of the same reasons we were talking about the truckers, where it's a bad time to commit to big, exciting new things. But if you look at the way Accenture is handling that versus what has happened to Endava, I don't know. You hate to see that. That has to change. Okay. DocuSign.
It doesn't seem like
No,
Endava has a plan.
it's
Like it's just like things are. It's like their whole commentary is
yeah.
like things are bad right now,
Which in a way should we be
and
glad
that's it.
about that? Because maybe that means that just trust in the process. And I haven't sold yet. I don't think I'm going to sell, but it just feels like that. Yeah, their strategy is, oh, it worked before. Just chill. It'll work out. Which hopefully.
Yeah, and maybe they're right. Maybe they're
DocuSign's sort
right.
of the opposite reason, though. But the DocuSign's most recent quarter, they actually did very well, but it's one of those things. If it quacks like a duck, it's a duck. And this whole, the futuristic world. I mean, they had more of a fantasy land that they were building than Meta. It turns out, okay, with this whole document organization system, that's just not happening. DocuSign is what it is. It is a mature company offering one thing. And this whole idea that they are going to be the entire spectrum and do all of these great things, like I say, it feels like as much of a fantasy land as Zuck's little metaverse that he created. And it is what it is.
Yeah,
They could still make it work. They can turn themselves into a mature tech company that has one great product. It's not a really great stock for me then, though.
yeah. It's tough. Like I've e-signed several things in my life, and I've used DocuSign only some of those times. And I think that's the biggest bear case for me. I mean, I owned it at one point and I sold it a while ago, but I could never get over it. That was like, even when I owned it, that was my biggest concern. Like every time I got refinanced a mortgage or signed any sort of document, I would always see like, is this DocuSign? And sometimes it was, and a
Look,
lot of times it wasn't. So
I mean, I'll push back. I want to push back a little bit on that because I think all of those products have to be like super seamless on like the consumer side, the person that's using it that's not paying for it side. So that doesn't surprise me. I've thought about that too, but
you're thinking, yeah, that was my experience because I'm just a consumer and not, using it to sign a
yeah,
simple thing.
yeah.
Yeah. Yeah.
But anecdotally, combining your anecdote with my anecdote, we now have anecdata. I've experienced the exact same thing, so it must be true. Right.
let me
Right.
give you,
Obviously.
without hogging too much more time, since I'm not all negative. On the positive side, this is one I don't own, but it's always fun to see a company go from potential to reality. Like for years, you sit there saying, if this all works out, it's going to be. If you look at what has happened with AeroVironment, AVAV, which they make they make backpack drones that loiter over to the battlefield,
Right.
and we've, unfortunately, if you've paid attention to what's going on in Eastern Europe, had proof of concept. And we have seen that stock, pardon the pun, explode based on the fact that all of this talk, all of this hype actually turns out to be true. It's still probably overvalued. I don't own it. I'm not buying it, but it's really exciting to see something that for years you talk about, wow, this looks good on paper, turning into reality. And that's what's going on there. And for those who have been through the ups and downs, because it has been really volatile, cheers, because it's neat to see now.
So,
All right. So Jason, before you give yours, I need to sign off. I had a hard stop about 10 minutes ago, but I got delayed now. But I got to go because we're heading out of town. So Lou, thank you for coming on. I'm glad I got to hear your answer and not Jason's. And Jason, I'm looking forward to
Jeff,
not
can I ask
listening to
real
what you have to
quick,
say.
how do you ever get
Go
Jason to
Braves, yeah.
stop these things?
Sure. You don't. We didn't
You
tell
just
you
hang
this.
up
This
on him
does not
eventually?
ever end.
Okay.
So
Okay.
thanks for coming on.
All right.
Yeah. Jeff will be back on Monday to relieve you. So, no. So, Cena, I love you. Thank you. His comment, screw the haters. The 20 holler is an awesome
Cena,
name.
don't
Thank you for
encourage
that.
him.
So, real quickly, it's too late. I've been encouraged. There's nothing we can do. Lou, I want to share my stocks real quick. So, one that I'm a little concerned with is STEM. So, STEM, this is the battery and software company. They're the utility scale batteries, and they're like their killer app is Athena, their AI based software that looks great. but they really missed some targets that they promised. Like they committed to the street to hit these cash flow targets and balance sheet targets, and they missed them by a ton. And then even with the stuff that came in after the end of the quarter, they still would have been way short. So I'm concerned because they have got to get their balance sheet strong, and they've got to show some positive cash flows or they're going to be in trouble. Ones that I was actually kind of positive about, Zoom, not because the results were necessarily great, they were fine, but they finally announced a stock buyback plan. Like it's finally buy some goddamn stock back, people. So they're finally doing something that's going to create value, and they have the money to do it. And the stock is cheap enough that it makes sense to do it. So that's one that I was actually pretty positive about too. Lou, I don't know if you've had a chance to look in the comments to see if there was anything else anybody asked or said that you would like to weigh in on.
We have.
I think we've hit most of them. While you're looking, I'll hit Teo's real quick. Asked, I love this. I just want to know who Mitch Fatel is and how much he's charging to invest my money. So you'll find out on Wednesday, everybody. Mitch won the first quarter. It's on the spreadsheet for the 2024 portfolio contest, but episode 42 from March 2023, so a little over a year ago now, 13 months ago, almost to the day. Investing is funny. We had Mitch Fatel on the show. He is a successful comedian, was pretty big in the early 2000s. Very funny guy. It's the equivalent of the person in your office that picked their March Madness teams based on uniform colors. His portfolio is kind of a little bit of that. So, but no, Mitch is funny. So,
Shockwave Medical,
Lou,
babe.
anything?
That's him.
Shockwave. Yeah, it's true. No, that's exactly, yeah, you're right.
Yeah,
You're exactly right. That's it. That is it. Well, Lou, it has been fun to have you on. I know you've got a lot going on. Appreciate you making the time to join us. Any final words
Everybody
here?
watched the one in Final Four tonight. I know this. Sorry, podcast users, it'll be over. But it's been real fun. So just watch it tonight. See what you think.
Yeah, some really good basketball. We had the LSU
Iowa.
LSU Iowa State.
Mhm.
The LSU Iowa game. That's the most viewed
More
NCAA
so for the
basketball
women's
game
side,
ever.
yeah, but higher ratings than the World Series.
No.
Higher ratings than the Golden Globe. And sorry, Matt Frankel, South Carolina's getting upset tonight. So that's your pick there.
Love it. I have to say, I'm going to be a little challenged because it is the home opener for my Atlanta Braves. So
yeah,
some divided interest there. So we'll see. Lou, it is 5:00. It is time to sign off and go have things other than coffee and other than beer. Let's do it. Sounds good. I'll see you there. I'll be there in 5 hours. All right, Lou, thanks again for coming on. Everybody, just a reminder, we always love to give our answers, share our opinions, and talk about these hard investing topics. Try to make them fun too. But as always, it's up to you to find your answers. You can do it. I believe in you. You know what? I think Lou believes in you too. All right, everybody. We'll see you next time.